Welcome everybody, this is Kriek, your host, all the way from sunny Portugal. It is 1 p.m. Eastern Time, and it is 6 o'clock in the afternoon here in Portugal, Western Europe. Today is Wednesday, the 22nd of July, 2026. Just let me know if you can hear my voice and see the welcome screen. Okay, good. Thank you. Thank you. I see we have Elena, we have Alfred. There's a few other people also coming in. I see Jewel, I see Tom. Welcome, everybody. Just let me know that you can hear my voice and see the screen. Right. Now, before we get started, this session is being recorded, and as usual, it will be uploaded to the website at KriekTrade.io. In the recording session. I'll go in recordings section, and I'll go and show you in just a moment. But before we get started, I need to make mention that I'm not a financial advisor, and that means I can teach you my strategies. I can point out to you where I personally would want to buy and sell, but the actual trading decision is still going to have to make yourself. Right. So let's go and have a look at the site. Actually, before we do that, a little bit about me. I'm Kriek. I've got many years experience trading and investing and teaching people how to trade and invest. And my mantra is that the market is a mirror. So if you're going to fear loss, then you're going to invite that. So stick to your system, stay focused, and stay fearless. Right. So I've already opened up the website, KriekTrade.io. So what you can do is go to the recordings section here at the bottom left-hand corner, click on recordings, and then you will see a recording, basically a archive here, as well as the latest recording. So after today's recording, it will appear here under the featured session section. Right, that was a mouthful. Right. Another thing, in case you didn't know, the KriekTrade platform is actually optimized for smaller screens. And I'm just going to draw here on the screen quickly. If you go and click the collapse button at the bottom left-hand corner, then the actual menu will become smaller, where you just see icons of the menu. And now the viewable area is much larger. And if I go and click on the charts, then you can see that the charts actually fill the whole screen here, which is lovely. Just turn off the 1 hour fibs there. So look at this. There's the daily chart. This is Bitcoin versus the US dollar. There's the daily chart. Here's the 1 hour chart. And if I go and click this little arrow button at the bottom of the left-hand panel, then it will expand that again. Okay, so now you can read the text behind it. Okay, right, so collapse and expand. Just for those of you who would like to see the charts and the information in all its glory. Right, Jill is saying go, Aussie yen go. I know. Looking forward to the breakout on the Aussie yen. Right, but that being said, I think the first thing I'm going to do is I'm going to open up the briefing. So let's just see what's happening with the markets. Remember that you will get a daily briefing in your email. If you are a subscriber, you'll see this in your inbox every day. We did change systems like a week ago, and for a couple of days the daily briefings didn't go out, and then it started coming out at midnight Portugal time. I mean, even before the Asians started trading, so that wasn't going to work. So from tomorrow, you will find it at 6 a.m. Eastern time or 10 a.m. European time in your email inbox as usual. All right. Right. So this is the daily briefing, and what can I see from the daily briefing? I can see that the narrative of the market is extreme greed at 90, and that means we risk on. Okay. And the Federal Reserve's dovish posture continues to suppress volatility and encourage aggressive capital deployment into equities and crypto. It is not clear if the Fed is going to raise interest rates. Last week's CPI inflation numbers were actually lower than expected, so we're getting mixed signals from there. So I'll stick to that narrative of the Fed being dovish, especially now that we have a new Fed chairman. And the signal here is to go long risky assets. So due to the fact that we are still in this irrational, exuberant last leg of the 18.6-year property cycle, I expect risky assets to continue higher, which means I can go long equities, I can go long high yielding currencies, I can sell low yielding currencies. And when I talk about going long a high yielding currency, let me just make this a little bit bigger. When I say go long a high yielding currency and go short a low yielding currency, can't spell today, low yielding currency, then it means I'm going to go and buy the Australian dollar, for instance, and sell the Japanese yen, which effectively means going long Australian dollar, Japanese yen. Because interest rates are so low in Japan, they're near zero, but much higher in Australia, it makes sense to sell the yen versus the Australian dollar. And we have built into the scanner the overnight interest that you will receive if you go long or short a certain currency pair, so that you can see if you're actually going to earn overnight interest by trading it. Because sometimes the market might be aligned, it might be bullish, for instance, on the Aussie yen, or on some other currency pair, and it's aligned, you can go long. But you might not be receiving overnight interest, which means if you get stuck in that trade, which is likely because of everything that's going on, all the geopolitical tensions and the tariffs and everything, then I'm not saying it's going to bleed your account dry, but it's demoralizing to open up your trading account every morning and see the broker has taken away some money, for the overnight interest charge. So if you go and click on the scanner, just wait for that to load, and then go and click on Forex, the top menu, then you can see here the swap rates, long versus short. This column here, swap rates. There we go, swap. Okay, so here I can see Australian dollar, Japanese yen is 5.6. So if I go long with one standard lot in the Australian dollar, Japanese yen, I'll be earning $5.60 every single day because of the interest rate differential. If I go short, then I'm going to pay. All right. So always keep an eye on that as well. That's why I'm so fond of going long the Aussie yen, and the Canadian yen, for instance, as well as, where's the pound yen? Oh, there's the pound yen. Not a huge difference. The New Zealand dollar yen is nice, $5.10. And I also see that there is a positive swap for the dollar Canadian as well as the dollar Swiss. The dollar Swiss I can understand because interest rates in Switzerland is very low as well. All right. And while we are on the topic of the Aussie yen, let's just see what's happening with the Aussie yen here. Aussie yen, the recent price is 114.12. The direction is bullish, but it's waiting for a bullish setup. There's a falling wedge pattern, and there's a target at 116.60. And with the market currently trading at 114.12, that means there's like a 240 or 250 pip upside potential on this one. So let's go and open up that chart. I can click here on the right at show chart, or I can simply type it in at the top. And let's go and have a look at the daily chart here. So this is the daily chart. So it said that this one is bullish, and the reason it's bullish is because we're above the 45 period exponential moving average, the purple line. So that's bullish. I know I need to be looking for a buying opportunity, and it makes sense to be buying it because we risk on. I can also see a pattern here. By the way, there is a drawing tool here on the left. It's this little icon that you can draw with. Let me know how that works for you. I think there's still work that needs to be done with the drawing tool, but anyway. I'm going to put a horizontal line here at the top, like that. And then I'm going to connect the higher lows, like that. And this looks like an ascending triangle. We've got a flat top and the market is making higher lows. I don't know if it will bounce against this resistance, but if it does break out, then it's going to move significantly higher. Now, a bullish pattern in a bullish probability is likely going to pan out. A bearish pattern in a bullish probability is likely going to fail. So I like what I'm seeing here. If I want to delete these lines, I can highlight them and press the delete button on my keyboard. And if you don't want to do any technical analysis yourself, then you can simply go and click on the patterns button at the top. And here it's also identified a falling wedge, which is a bullish pattern. And you can see that this falling wedge was broken to the upside. Nice one. Wow, that was a nice pattern. Look at that nice breakout. So we're heading up. Let's see if there's any harmonic patterns. I don't see any harmonic patterns here. And we can have a look at the Dow channels, which is basically technical analysis by means of trend lines, where there is a primary trend, a secondary trend, and a minor trend. The minor trend is this pink trend over here. And it's looking good. Bullish primary, bullish secondary. The minor trend is actually replicated on the 1 hour chart. So I can go and open up the 1 hour. That's the 1 hour chart. It looks like the Aussie yen is actually against resistance. Look at this. This is why I like to draw the intermediate line of a trend channel, because if we're above it, it's going to act as support, and if we are below it, it's going to act as resistance. So let's see if it will break that resistance. That would be nice. Interesting. Another nice feature of the dashboard is the AI forecast. There, AI forecast. And if I select the daily, then it will draw AI forecasted candlesticks into the future. Look at that. So it looks like we're going to see a little bit of a retracement before the market goes up again. And that would mean we're going to see a continuation head and shoulders pattern here. Like that, something like that. All right, few questions coming in. Jill says, do you ever venture into some of the less popular currencies that have higher interest rates? Not really, because not all brokers support them and they're not that liquid. So they're extremely volatile, and that is a for the lack of a better expression, anxiety inducing. So, but if you have a request, then yes, we can analyze it. but you'll see they are exceptionally volatile. And when the broker starts to roll over for the day, the spread widens so much you see a huge, huge fluctuations in your trading account. So uh, maybe try and trade a demo and you'll see. Tom is saying, how will the AI deal with the multiple combinations of brokers? Rates are not always the same direction or rate for the same instrument. Yes, that is very, very true. And to answer that question, so for those of you who did not hear, Thomas got a great question. Remember, I was talking about the swap rates, the swap column, where there's a difference between um, the 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 underlying currency country interest rates, and what we do here is we compare the 10-year treasury bill of each country. That's what we do, and we just note the difference here. Some brokers will have a different value, but this will give you an idea of what to expect. For instance, if there's a huge difference, like for instance on the Aussie yen here, if there's a huge difference between the Aussie yen, which is true, and your broker doesn't really pay you anything, then maybe you're trading with the wrong broker. Okay, so you can use this as a benchmark. All right, so that's what we do. And as an extension of this, if you go and click on the daily briefing, we also have the yield curve at the bottom right-hand corner. Now, this is just to show if if we're in a recession, if it's inverted, and it's part of the formula where we calculate the risk gauge. But here you can see we have an updated value for the 10-year treasury yield. Okay, and we have that for each country. So if you're trading the Aussie versus the yen, it will just take that difference between the 10-year bonds of each country. Okay, so that's how we calculate it. Hope that makes sense. Right. While we're here, let's just see. We do have Australian. If I look at the economic calendar, Australian unemployment rate coming out at 0130, which is going to be in the Asian session. That might have an impact. And then we have the Bank of Japan government bond purchases. I don't know if that's going to have a huge impact. Looks like we have a holiday in Japan as well. But let's see how this all fits together, because now what I've shown you is that we are risk on based on the macroeconomic environment. And there's clearly a bullish probability on the Aussie yen if we look at the charts as well, because the daily chart is bullish. We're above the 45 period exponential moving average. And here's the 1 hour chart with a bullish minor trend. And I can even have a look at the Fibonacci ABCD swing. There we go. Let's take off the Dow channel here. So there's your up Fibonacci ABCD swing. Here's the A. There's the B, and then the market retraced here. Very shallow retracement. It didn't even hit the 236, but the D extension is going to be the 2.618 due to the fact that it's retraced so deep, and that is at 11660. Okay, so that's the target. But now it's telling me to wait for a bullish setup because it did not retrace to at least the 236. Okay, and if it's not going to do that, then so be it. Then it's going to go up to the D extension without giving us a deep retracement. But it's your call. It's your call if you wanna go long on this one with that shallow retracement. I actually don't mind because I see that the RSI, the actual RSI, just crossed its own moving average. Look at that. Nice one. That's a nice bullish cross that we have there. Okay, but anyway, that's your call. We just calibrated the platform in such a way that it has to retrace to at least a 236, and then the RSI needs to give a signal, and then we can start trading towards the D extension. But now, what I've explained here is the technical setup and the technical situation of the Australian dollar Japanese yen. But we also have another tool that you can use, and that is called asset valuation. And this actually started, especially for people who want to trade ETFs and stocks and so on, where you can view the microeconomic data of that particular company as well. But we have recently upgraded it so that it will work on other symbols as well. For instance, if you want to go and see the valuation of gold, then it will take the macroeconomic environment as well as the technical climate, but then also look at other factors like which central banks are buying gold and how much do they actually own, and if they're buying or selling. So let's see what they're saying about the Australian dollar Japanese yen, for instance. So I'm going to go and click on asset valuation because the Aussie yen is the symbol that's already open in the dashboard. It will populate it. Otherwise, you can just go and search a symbol you want. But I'm just going to click on generate report. And let's see what this AI engine is going to come up with for the Australian dollar Japanese yen. Right. So here's an executive summary. The Australian dollar versus the Japanese yen is currently trading at 114.11, exhibiting strong momentum as it tests the upper bound of its recent range. With the 18.6-year real estate cycle in the mid-bull phase and our proprietary risk gauge at 90, which is risk on, the structural tailwind remains firmly behind this high beta carry pair, which means you gain exceptional yield when it comes to currency pairs. The combination of a risk-on environment and the Aussie's yield advantage over the Japanese yen creates a high probability alignment for continued upside. So there you have it. There's no reason to be selling the Aussie yen. Okay, just by reading that summary. But then we get to some interesting things like key valuation metrics. All right, there's the yield differential. Right, 4.15%. Strong carry incentive, strong carry trade incentive. Um, there's a 12-month inflation difference here of 1.2%. So over the past 12 months, from an inflation perspective, Australia has maintained the real yield edge here, which again is, I mean, it's obvious that I should be buying the Aussie Japanese yen. And then it tells me what the central bank is actually doing here. The central bank, the Reserve Bank of Australia, they're hawkish, and the Bank of Japan is neutral. So this supports going long on the Aussie yen. And then we've got some other stuff, some fundamentals. The primary driver of Aussie yen remains a persistent interest rate differential. It will talk here about the Reserve Bank of Australia, the Bank of Japan, and it's talking a bit about geopolitical tensions in the Red Sea. Okay, so that could cause some risk aversion. So sometimes when we see equities come down, if there's a high risk, um, or if there's like a sell-off in risky assets, then the yen will actually gain, and that means the Aussie yen will dip. But that will just open up the door to buy at a lower price, in my opinion. Um, so very interesting, very interesting information that we actually have here. And this is applicable to any symbol that is in our dashboard universe, any stock, any ETF, commodity. So go and have a look at it. I'd like your feedback. If there's any symbol you'd like to analyze, go and use this tool, the asset valuation tool, and see how that works for you. All right. Okay, so that was the Australian dollar, Japanese yen. I think I'm just going to continue taking requests here. But you know the drill, just like it always is. Buying risky assets, selling low yielding assets like the Japanese yen, going long equities. By the way, talking about equities, we have Google announcing earnings later today, as well as Tesla, as well as IBM. Okay, so watch out for Google and Tesla. That might have a big impact on the markets as well. Already see that with the escalation in tensions in the Strait of Hormuz, we did see equities consolidate a little bit, not really dive, but it looks like dip buyers came in again. And if we get good earnings and we actually get good news on the geopolitical front, then we're likely going to see it just continue higher. Let me show you what I mean. I'm just going to open up the S&P. There's the SPX, which is the S&P 500. This is the daily chart. You can see this consolidation over here. There we go. We're still above the 45 period exponential moving average, and the market did dip here, but for the past few days it has been bought up. So it's actually still consolidating. This is a almost looks like a symmetrical triangle where the market's making lower highs and higher lows. Anyway, a catalyst would be de-escalation as well as good forward guidance from the earnings we're going to see. A few questions coming in. Thomas saying, is there a way to get the participants' name list dropped to provide more width for the chats? Is there a way to get the participants' name list dropped? There is a way, yes. There is a way. In the upper right-hand corner, there's a participant number. If you click that button, then it will hide it. Okay, so click the participant number, and that will hide it. All right, let's go back to the chats here. Okay, so Jill is asking for the S&P. All right, while we were on the S&P, this is the SPX, which is the S&P 500. Okay, so there is a triangle over here. The market is above the 45 period exponential moving average. What else do we have? Okay, so the AI forecast is a bit weird. Look at that. It's signaling a huge drop here before the market comes back again. I hope that doesn't happen. Let's have a look at some other variants of the S&P. Going to go to the scanner, yeah, then I'm going to click on indexes. You can also have a look at futures. Okay, indexes. Okay, we had a look at the SPX. I don't see anything else here. Let's have a look at futures. Australian dollar futures, pound futures, E-mini, S&P 500 futures. Okay, let's open up this. Show chart. Oh, this is the wrong one, excuse me. Let's go back here. Scanner. Yes. Show chart. Tristan is asking, why do I suppose the predictive is showing such a strong pullback? So what the predictive, what the AI prediction actually does is, it's actually very simple. It looks at the current candlesticks here, on the daily chart, and it will go and look. Let's say these bunch of candlesticks. It will go and have a look at that same. It will try and find exactly the same pattern of candlesticks in the past, and then it will project in the future what happened after that. In a nutshell, if I can explain it in very simple terms. So it's not the be all and end all, but just like any pattern recognition system or any pattern that you identify on the chart, if the probability is bullish, but you see a sell signal, then take that with a pinch of salt. Okay, because a sell signal from any indicator or pattern is likely going to fail in a bullish probability. Okay, so I'm not too worried about that, but it's interesting. Okay, now I did open up the SPX, that symbol, which is the spot, the S&P. This is futures. Let's see, excuse me, if we have the same AI forecast. So I'm going to click on the daily AI forecast, and it shows the same thing. Look at that. Wow. That's interesting. That's very interesting. Well, I guess we got to see what's going to happen and see if the AI forecast was right or not. Hmm. All right, I'm going to take this off and let's have a look at some other patterns and see. Oh, there's a rising wedge. A rising wedge is a bearish pattern, but again, we're above the 45 period exponential moving average. I have seen this so many times. If we in if the market is bullish and you see a bearish pattern, then it's unlikely that that's gonna work. That's gonna fulfill itself. So I'm really not worried about that. Any harmonic patterns? Don't really see anything here. Let's have a look at the daily Fibonacci ABCD. Look at this. There's the A, there's the B, and then the market retraced here. Wow, I didn't even retrace to the 236 retracement level. So the D extension is going to be the 2.618, which is at 9,308. Crazy, huh? Um, let's turn that off. Look at the trend lines. Bullish major trend, bullish secondary trend, bullish minor trend. Let's go and have a look at the 1 hour. So there's the 1 hour chart. I did have the 1 hour Fibonacci turned on, but it says here on the screen, it says here the Fibonacci is suppressed. The current swing is bearish, but the macro regime is waiting for a bullish flip. So counter regime setups are hidden to avoid confusion. What it basically says here is that it cannot draw an up Fibonacci ABCD swing due to the fact that there's no golden cross from the 144 and 377 exponential moving average. I can click this box and you are likely going to see that it is not in a golden cross situation. There was a golden cross, but now look at this. That's a death cross, so it can't. It's impossible to draw an up fib here. So now we're going to have to wait for a golden cross again, and then I can start drawing an up fib. So there is no target for the S&P at this point, and that's why it's saying wait for a bullish setup. So even though the narrative is bullish and the risk gauge is at 90, and we're still bullish with the 18.6 year cycle, and the trends are bullish and all of that, the market is actually still just consolidating. You know, it's not really, we haven't really seen that huge breakout that I've been talking about for months on end. Because I mean, look at this pattern here. I mean, it's just been consolidating since when? Since the middle of June. Okay, well, I guess it's, oh, middle of May. Yeah, it's only a couple of months. It's okay. I think I'm just impatient. Right. Maybe that death cross is seen by the predictive candlesticks. I don't know. I don't know. But um, all these sessions are recorded. So if we do see a drop in the S&P, like in August or soon, we can always go back to these recordings and see. You know, I mean, that would be amazing, wouldn't it? It would give so much credibility to the predictive system. All right. Anyway, so there's your analysis on the S&P. My verdict on this is that yes, it is bullish, but there's no buy signal at the moment. There's no buy signal. It's consolidating, so I take a wait and see approach. If I was already in with a buy, I just carry on watching paint dry, I guess. I wouldn't close it. I just hold on to it. Okay. Right. Alfred is asking for silver versus the US dollar and gold. All right. So let's go and turn off all these analytics. And I am just going to open up gold versus the US dollar here at the top. If you double click on the chart, then it will open up a full screen chart for you. I can't see the chart. Oh, there we go. So if you double click the chart, it will maximize it for you. All right. So there's gold. Nice one. Look at this. We're approaching the 45 period exponential moving average again. It's not bullish, and that's why it's saying waiting for a bullish setup. It's not bullish. It's not above the 45 period exponential moving average. But most importantly, in a risk-on situation that where we are currently, the US dollar is likely going to weaken, and that means gold is just going to strengthen automatically versus the US dollar. And that's what we're seeing here. But it needs to move above that 45 period exponential moving average because it has been bearish since April actually. But I can see that momentum is picking up. This is actually volume. Look at that breakout in volume. As well as momentum is turning bullish. And look at this. The RSI has also crossed its own moving average to the upside after it has been extremely oversold in June. Right. Well, let's do some auto analysis here. Some technical analysis. Let's do some exciting stuff. Let's have a look at the Dow channels. Okay, so there's a bullish primary trend, a bullish secondary trend, and a bearish minor trend. Okay, so it needs to break that one to the upside. And again, if you want to see the minor trend better, then you can open this one up on the 1 hour chart, and there the minor trend will be in all its glory. Approaching that minor trend resistance by the looks of it. Okay, back to the daily chart. Okay, so at least the primary and secondary trend is bullish, and it looks like it bounced here against the secondary trend support line. Let's tick that off, and let's see what the AI forecast is telling us. Oh, more downside. Same thing as the S&P. The RSI, it's just a normal RSI. Tristan is asking, what is that RSI that you just showed us? It is just a normal RSI. Okay, it is a 14 period RSI. Oh, excuse me, it is a 13 period RSI, and plotted over this RSI, this orange line, is a 14 period moving average. So it's just a moving average of the RSI giving you a golden cross or a death cross. That's the signal. Okay, that's what's going to give you a buy or a sell signal. Permitting that we're actually bullish and above the 45 period exponential moving average. Okay, any harmonic patterns? Okay, there was a Gartley pattern here, and it's still intact actually. What's nice about these harmonic patterns is that the X is always the beginning, and then you have the A, and then you have your B, and then the C, and then the D here. And that's where the market normally finds support. So you can see there was support over here, and then support on numerous occasions. And that's also at a round number, a psychological level of 4,000. But the A is normally the target, and that target is at 5,600, which is another round number, another psychological level. But you need to take this bullish signal, this bullish price pattern, this Gartley, with a pinch of salt, due to the fact that the market is still below the 45 period exponential moving average. The moment that it moves above that, then I can assume that we're going to go up to that target. Okay, So I hope that makes sense. No reason to get in on gold right now. Wait for the daily chart to move above the 45 period exponential moving average. Any other patterns? Nothing. It won't draw a daily Fibonacci. Oh, it does. Oh, yes. Okay, because there's a golden cross. Yes, we still have a golden cross with a 144 and 377 exponential moving average. There we go. There is the golden cross that occurred in 2023, and it is still intact. Still intact. So it will just keep on drawing an up fib. Now, let's have a look at this Fibonacci here for a second, because that was a huge retracement, a deep retracement. Goodness. Look here, there's the A. And then we had the B here, which was that high. And then the market retraced to a very deep C. It almost took out the A, but did not. So that is regarded as an 8.6 retracement level, where the market retraced 86% of the up AB boundary, which means the D extension is going to be the 127 extension. Actually, you know what? If it's going to retrace the 8.6, the D extension needs to be the 1.18. I haven't really seen such a deep retracement in a while, so I guess we couldn't have tested that. One second, I'm just making a note here. Okay, good. Okay, next time we meet, it will be that bug will be fixed. By the way, we're not going to meet next time. We're not going to meet next week, Wednesday. Why? Because I've got a doctor's appointment. So just make a note in your calendar, in your diaries. We're not going to have class next week, Wednesday. Okay. It's just a periodic uh, doctor's appointment that I have. Tristan is saying, was there a 786 or an 86 retracement? 86. Yeah, that's an 86 retracement. It says here 786. That's an 86 retracement. So if it retraced to the 786, then the target would have been the 127 extension. But it now retraced to the 86 retracement level, which is much deeper. So the target has to be the 1.18 extension. Okay. And that has not been updated yet. The target should be the 1.18. All right, but that's what we have from gold. The verdict here is that it's not bullish. It's very close to the 45 period exponential moving average. Wait for it to move above that, and then we can have a look at this one again. I wouldn't be so eager to trade gold at this point. Then the next one is going to be silver. Before I move to silver, there's a question from Tom. What is the number 2 on timeline between July and September? The number 2 on the timeline between July and September. Oh, you mean this 2 here? I don't know. I don't know everything, you know. Oh, now it's a 3. So it's the way that I've zoomed. It's actually the 3rd of August. Okay, I guess that's misleading. It's the 3rd of August if you move the crosshair over it. Yeah, let me know if it's confusing. Let me know if it's confusing, but it's just the second or it's the day of the next month. It's the day of the next month. Right. Silver. XAG USD. Where's the chart here? Oh, there we go. Right. Same thing. Up AB boundary. This is an interesting one. Okay, so first of all, the market is still below the 45 period exponential moving average. So I wouldn't be buying it. It's exactly the same as what we are seeing on gold. Same thing applicable to silver. Not tradable at the moment. I wouldn't be selling it because we risk on. So I would patiently wait for this one to move above the 45 period exponential moving average and then look for a buy signal on the 1 hour chart, which will be indicated by the dashboard. But now what's interesting here is that we have an up Fibonacci AB boundary. So that was the A, that's the B. Then after the B was hit, we had a very, very shallow retracement, which means the D extension would have been the 2.618. But it never hit the 2.618. But then it started to retrace deeper, and then it hit the 382, and then the 50, and then it hit the 618. So now the D extension becomes the 1.618 instead of the 2.618 because of that deep retracement. So the target here is 110.98 on silver. But it needs to move above that 45 period exponential moving average. All right. So the chart will tell you, wait for a bullish setup or wait for a bullish flip. And if you don't want to look at the chart, just go to the scanner. And the scanner will tell you exactly the same thing. You can type your symbol in here. You can, for instance, let's click on stocks. I mean, we've got Tesla with their earnings today, and what is Google's parent company? Can you believe it? I forgot. Oh yeah, Alphabet. All right, sorry, it was Alphabet. Where's Tesla? Okay, so there's Tesla. Tesla is bearish, but wait for a bullish flip. So you can already see here that it's not even a good idea to be going long on Tesla. Let's just see why. Yeah, this is why. Very clear and simple. It's below the 45 period exponential moving average. Not tradable. Back to the scanner. Let's have a look at Google. There. Well, I just had it. Oh, there we go. Also bearish. Wait for a bullish flip, but there's a symmetrical triangle. Goodness. Yeah, look at that. It moved below its own 45 period exponential moving average. So I guess it's not tradable as well. Wow. What a bummer. Guess we gotta wait. But anyway, I hope this makes sense. What I told you here today, what I showed you. It's very easy to see what is tradable. Okay. If it's bullish or bearish and what the target is, even if there is a target. Because if there's a target, it will tell you so. I can go and filter by signal, and there's a signal on Bitcoin. There's a signal on Ethereum. We can open up Ethereum here. There, it's above the 45 period exponential moving average. If we look at the 1 hour chart, there's a signal. It says here, bullish setup confirmed. And let's look at the stop loss and target. There's the entry. If I had to enter it now, there's a stop loss and there's a target. The risk reward isn't that great, but that's it. And this is based on the 1 hour Fibonacci ABCD swing. Look at that. Huge up AB boundary. Shallow retracement. That's why the target is at 2.618. So just go and have a look at that. And if all else fails and you still don't know what to do, just go and click on the AI assistant and ask it any question. Like, what is the target of Ethereum USD? Should I be buying it? Okay. And there it is. The current target for Ethereum is 2212. Please note the bullish setup confirmed. Okay. And you can say, but why is the target at that price? Or whatever you want to ask it. So that's your all else fails AI assistant at your assistance at your service. Okay. Jill says, just for fun, can we look at SpaceX? Yes, absolutely. I know that we don't have a lot of data, but let's see. SpaceX. What is the SP? I can't remember what the symbol was. Stocks. There we go. SPCX. All right. It says it's bearish. Wait for a bullish flip. Ooh, that looks terrible. Yeah. I can't even draw a 45 EMA. We don't even have 45 candlesticks, do we? I guess not. So, yeah, I'd wait. I'd pass on this. I wonder if there's AI forecasted candlesticks. Not even that. Doesn't have enough data to even do that. Yeah. All right. Okay. Well, I thank you for your participation in today's session. Thank you for joining, and you'll receive an email later today when the recording is ready, and you can go and view it on the website. And if there's anybody else watching this video, you can get the daily briefings for free in your email inbox. Just go and click on the home page, scroll down, and type in your email address, and you can subscribe. Okay. Otherwise, this to view the webinars live and have access to the dashboard, it's 49 euros a month, or you can pay yearly for 4.99 a year. All right. Anyway, this is Tian Kriek. Thank you, everybody. Have a fantastic rest of your Wednesday. Jules says many dollars lost for Stacey. Yeah, I know. I know. There was so much hype, but we risk on. So I guess it will come back. It's just patience. Patience is a virtue. All right, everybody. Have a fantastic rest of your day. This is your friend from Portugal, Tian Kriek. Have a good one.